Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at the macro and the short-term price action, discussing the recent daily candle close, the uptrending momentum since the beginning of August, exactly what Bitcoin needs to do to continue upwards, and our downside warnings. We'll also be going over the upcoming election, the market data, economic news, and so much more. Over the past 24 hours, we have seen Bitcoin rally upwards to retest the macro downtrend of this falling wedge structure, which has been developing over the last 6 days. And we have seen a rejection from that point, resulting in a swift correction to grab lower side liquidity at our 67.4k region, as well as retest the downtrending support of this falling wedge pattern. This swift correction came as a consequence of Kamala Harris's voting polls being higher than expected, and we all know that Kamala Harris has a bit of a negative stance on cryptocurrencies. We've seen the market go slightly more risk off, moving into any news revolving around her doing potentially better than expected. Now, my personal opinion is that no matter who gets elected, the macro consequence in terms of where the price action is going to go in the long term is going to be all but unaffected, as what drives drives risk asset growth comes down to two things: economic policy, okay, and policy surrounding sector-based decisions. So we could see some suppression for cryptocurrency if Kamala Harris gets elected, such as unrealized capital gains taxes that could massively squander and hinder the space. But for the most part, if interest rates do drop, we are generally going to see the dollar fall in value, and assets will value against the dollar increase respectively. So we'll see risk assets go up generally, regardless of the election result. But the short-term price action, we will likely see a stronger result for cryptocurrency upon the Trump election than we would see for Kamala Harris's. But make sure to know the macro expectations are very much going to be unaffected no matter who gets elected. It's all about the short-term expectations and the possibility for policies to be implemented that could hinder the future growth for this sector. But the asset itself will likely rise irrespective who gets voted in, as it is valued against the dollar. And if the dollar drops as a consequence of interest rates falling, the asset will rise. So moving over to everything else in just a moment. If you do want to join us on Telegram, it is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay loaded for cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in taking your trading to the next level, join us in VIP. It is the first pinned comment in the free channel. You can click my name for more information, or find our entire trading track record going back 45 months over here with every single trade we've ever taken. We have over an 80% win rate of 1,108 trades over 45 months. Insane stuff. And if you're interested in seeing what is in the VIP channel, click this link. It will show you a full detailed 10-minute dive into the channel, showing you absolutely everything you'll get access to, showing you all the group chats, and leaving no stone unturned. Check it out, guys, and let's jump into the video. So as we've said, the last 24 hours of price action has been a little bit chaotic. We've seen the price go up, we've seen the price go down, and that is kind of expected as we are moving into this week. We have a major week here. We have the election. We have, of course, the interest rate data. This is going to be our Federal Reserve press conference and our interest rate decision on the 8th. Now, that is going to be in just over 2 days' time, 2 days and 18 hours. As of right now, there's a 99.5% probability that we do see a 25 basis point reduction. And as we have discussed in our prior videos, a reduction in interest rates is inherently going to be bullish for cryptocurrency and bullish for risk assets. If we move over to our flow chart very briefly, we can see interest rates have a very strong correlation between inflation, costs of goods and services, and of course the value of the dollar. When we see interest rates reduce, we eventually see inflation increase. We see the dollar decrease in value against assets and services, and eventually we see spending increase. That is down the line. But in that middle point, while inflation is pushing upwards, what we see is we see debt to service ratios decrease as interest rates fall for both households and entities, so companies, institutions, households. That results in more available household cash flow, as debt obligations decrease, which facilitates more retail spending on assets, as well as facilitates companies to acquire cheaper debt to purchase income-producing assets, which generate more income, which they use to then leverage against the debt to purchase more assets. So it's a whole big spiral, and that generally occurs as debt decreases and again interest rates fall. This cycle takes a very long time to play out. It is not instant. It will take many, many months of falling interest rates to eventually have a positive macro implication or effect on the risk asset market. So it's not immediate, it takes a very long time, but we can see here how that is expected. So overall, the interest rate reductions is good. We can see the DXY is struggling to continue upwards. Again, if we do see interest rate reduction, it is likely the DXY is going to continue back into this 100 region. And like we said, over the next, 10, 12 months, we are expecting DXY to move all the way back down, potentially into 96 or even 94. So keep your eyes on that. Very, very bullish stuff. Moving over to the S&P 500 real quickly. The weekly candle close was able to sustain above that weekly high point. This is a critical level for the S&P 500, and if the S&P 500 drops below this region, this would be the first sign of major high time frame weakness for the S&P 500 since we actually entered a uptrend all the way back in May 2023. Since then, we have established highs and lower highs, right? We have, higher highs and higher lows. We can see we've established these points as we have been going up. And as we've been pushing up, these prior higher highs have always been respected. We have never dropped weekly candles back below these levels. We have come down to retest them, but we've never dropped weekly candles back below. So if we're able to see a weekly close below this higher high, that is at around 5,600, that would be the first sign of weakness for this trend we have seen developed since mid-2023, which could be a warning sign for a potential future correction. But while we remain above this weekly high, we are expecting continuations into 6,000 and beyond. So warning signs there, but nothing too severe. That is it, guys. Let's jump into Bitcoin. Before we do, if you are interested in getting 15 to 45% lifetime trading fee discounts on all your trades, sign up to any of the exchanges below. BitGet, BitUnix, or BingX. This is where I trade on all those exchanges, so you can trade where I trade. You'll get your discounts on your trading fees. You'll support me making these videos, and of course, you'll support yourself in your trading career. So go ahead and sign up, 15 to 45% discount on your trading fees. You can find the links down below, and we'll jump back into the video. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and jump on back in. Now, let's start on the daily chart, as we have seen a little bit of a move downwards for Bitcoin on the short term. But it is very important to note that the key levels on the daily that we have been watching to sustain have managed to sustain another day. So does this mean Bitcoin is good? Does this mean we're going up forever from here? No, but it means at least for now we have sustained above our key invalidation points. Therefore, there is no reason to be particularly bearish at the moment on Bitcoin. Now, taking a look at these levels, the most important level I am watching. Now, everyone trades differently. I'm a momentum trader, so of course my invalidations are going to be based around momentum. I am watching the RSI. The RSI is simply going to be a representation of momentum in regards to the price action over a particular visible period. This period we are taking a look at is going to be since the bottom at August, which is going to be at 49,000. We have two segments, segment 1 on the left, segment 2 on the right. Since we entered segment 2, which is a game where the price action kind of broke this pattern of lower highs and lower lows and started developing these higher highs and higher lows, we have seen momentum continue upwards. We have seen positive momentum on the RSI. With that positive momentum, we have been seeing the price action continue upwards. This is a representation of strength. It is a representation of the strength of the trend. Therefore, while the RSI is able to sustain, we are expecting the price action to continue the pattern of higher highs and higher lows in this uptrend. If the RSI breaks down, that would be a major warning sign that Bitcoin could be seeing an extended correction into these prior areas of horizontal support, looking particularly at around 64,000 as a first target, and if we drop below there, even lower into that 60k region. So a major area of support in that region, we'll discuss in a second, that Bitcoin will need to sustain above to remain macro bullish. But as of right now, there is still hope that Bitcoin could be bottoming out here for a continuation upwards. We'll discuss that in just one moment. So if you're watching anything on this chart, the most important level we are watching is going to be that RSI. Moving over to the short term, we'll come back in a second. That falling wedge structure we talked about in yesterday's video is still in play. We still have this falling wedge structure, which is simply a downtrend for Bitcoin, where we have two converging trend lines, our converging downtrending resistance and our converging downtrending support. Moving into an area of support, we did see the price action actually liquidity grab below this horizontal region around 67.4, grabbing that lower side liquidity, and of course, retesting this lower trend line. We can see the RSI is showing signs of bullish divergence, where we simply have a downtrend in the price action and an uptrend in the RSI. This is simply a representation that the sellers during this period are potentially exhausting and the buyers are stepping back in. That doesn't necessarily mean buyers have control yet. It simply just suggests that at least for now, the sellers are exhausting. And that gives us the potential for a reversal to develop. As we said in yesterday's video, for the buyers to really get in control here, this falling wedge structure needs to break toward the upside. We need to see this downtrend we have been in since essentially the start of October break toward the upside. If the price action is able to break above this region, we are then expecting a continuation into our horizontal resistances at 69.2k, and above 69.2k, we enter this volume gap, or at least a lower historical resistance range, a LHRR, which will facilitate a likely continuation into that $72,000 region again. So again, this month has been choppy. We have seen a massive sell-off. It's been a big month. We have a lot of economic news. This is partly due to a fact that we have the election coming up. The market is going risk off into the election. It is also going risk off into interest rate data. So we have to contextualize this correction with what is actually pushing the price actions. Remember, price action is a combination of people's decisions. People's decisions are influenced by the media. They're influenced by economic and political events. They're also influenced by their own psychology and biases. Some people are literally just degenerate gamblers and they just gamble. They don't know what they're doing. But some people make decisions, and especially big money makes decisions around political policy, economic procedure, economic developments, and of course, they control what the media says, which kind of influences the general retail decision makers, and then we see that kind of expressed in the charts. So to say the price action is corrected simply because the price action is weak is a little bit of an overreach. There's a good chance the price action over the last few days has actually seen this drawdown simply because it is risking off, it is taking risk off the market, moving into what will potentially be some very major events that can have profound macro consequences on the direction of the price action and short-term price action, depending on how they play out. What we have to take at face value is the key horizontal structural levels and where that liquidity is, the key technical levels. Again, we are in a downtrend until we are not. We are in an area of support until that area of support breaks. We are, or should I say, we do have positive strength while the RSI represents that, and only upon the invalidation of these objective facts will we then flip bias, should then say, well, the strength of flip negative, the RSI have broken down, thus the probability of continuation lower have increased, or alternatively, the falling wedge structure has invalidated, and therefore we now expect continuations lower rather than a likely continuation higher if the wedge were to break upwards. So we have to trade off invalidation points sometimes rather than just trying to predict what's going to happen next. It is better to have identified clear lines where if those points were crossed, you flip your bias. And adapting when trading is the most fundamentally important part of being a trader. The people who have been permanently bearish this entire way from 16k, okay, the people yelling, we are in a bear market, we have been bearish, what are people who were bearish down here and have remained bearish this entire way up? Those are the only people I see who are screaming we're in a bear market. The other people I see screaming we're in a bear market are the people who bought the exact top and have been dumped on. Everyone else is not screaming we are in a bear market because literally nothing is suggestive we are in a bear market. from the technical levels on the weekly, from historical patterns and trends, from economic expectations and how those economic developments have positive macro implications on price action, particularly for its assets, and how they have done so in the past, its historic economic trends and the influence they have on risk assets, all suggest the price action is primed for continuations. It is only the short-term fluctuations that cause mental instability in some people, which then result in these panic attacks and then, these emotional flare-ups, which is, in a bear market we'll drop 5%, even though we're up from 16.5k since the bottom has actually begun. So again, you have to take the price action at face value, and that is the risk when you do not trade with invalidations. If your invalidations continue to move, you're always going to be trading emotional. You have to trade based on facts. I always tell everyone, I'm not a bull, I'm not a bear. I simply trade the trend. I will flip when the data suggests it is time to flip, and if I am wrong, I am wrong. And it doesn't matter if I'm wrong, because if I trade with the trend the entire way up, I have been correct. I bought a 16.5k, and if I'm wrong slightly at the top, I lose 5%. It doesn't matter in comparison to the hundreds and hundreds of percent, thousands of percent we have made over the last 1.5 years trading this uptrend. So it is simple as that, guys. You have to remain unbiased and unemotional when you're trading. Otherwise, you're always going to be questioning yourself. You're always going to be flipping, flopping, and you're always going to be wrong. It's just how it works. So on the short term, those are the levels I'm watching. I do not think there's a 100% guarantee Bitcoin is going to behave, I would say, as per exactly what the TA is suggesting. Because, again, the TA is just a representation of the price action. It is a derivative of the price action. The price action is not expected to behaving what we would say normally or predictably is a better word, as a consequence of heightened emotions. And again, like we said already, the price action moved based on buyers and sellers' decisions. Buyers and sellers' decisions are influenced by a whole range of things, okay, emotion being one of them, political events, economic news, okay, so we can understand that price action moves based on people's decisions, and we understand people's decisions are more likely to be misguided and influenced during this particular period. It is more likely to assume that we should expect the price action to behave a little bit more sporadic, and therefore we should be more cautious when trading these conditions. So that is what I'm watching for the short term, guys. We're looking for a break of the downtrend. We're looking for a break of the horizontal. Then we expect continuation. If we invalidate this trend line, we drop below here, we are watching our strong lows. We are watching these points right here, 65.6. We are watching 65.2 for potential reversal points from those regions. And of course, we lose these points here. That is when Bitcoin is going to be in trouble for continuations back into these lower pockets. We are looking at 63 to 62,000. We are watching these lows. So we'll go ahead and draw it out one more time for you. If we fail to hold this downtrend, we are watching for a move into this liquidity pocket right over here, which is around 65.2 to 65.6. If we do not bounce from here, okay, we will likely see a correction to flush and sweep the liquidity at 62,000 before we then continue back upwards. If we drop below that liquidity, we are at a massive, massive risk of continuing to 60,000. And as you know, if we drop below 60,000, according to our macro charts, that is actually technically when the trend will be flipping bearish, according to our weekly macro charts. So that is it, guys. Thank you for tuning in. Let's quickly go over the total. The total is unfortunately not looking as good as Bitcoin. We have dropped below the RSI trend line, which increases the likelihood of a correction towards this uptrend. That is very possible. Most of that correction will likely come from altcoins as Bitcoin dominance continues to soar towards the upside, and the total 3 market cap looks absolutely freaking horrendous. Again, we are looking for deviation into our low over here for entry points for altcoins. I'm not looking to buy altcoins mid-range. This is mid-range. If you are buying altcoins here, you are buying at profound risk. You are taking a 50-50 gamble on whether or not you're going to see a swing to the high or a swing to the low. It is better to wait for confirmation of range high breaks, or even look for deviation of range lows before you take those positions. That is what I personally do, and that is what I would look to suggest. I'd be watching for deviation into the range low. That's another 15% for most altcoins if that happens. Or if we rally upwards, fantastic. Bitcoin goes back upwards or back above the range high. The price is in an uptrend again. Then we look for buying altcoins when the market is at a position of strength. Altcoins are situational. Altcoins are situational investments. You want to buy altcoins when the entire market is in a position of strength. You do not try to pick altcoins as market reversal points. Otherwise, you will likely just end up holding a bag 20, 30, 40, 50% towards the down. And that's going to be a big problem for you when you start dollar costing, averaging, and your entire bag's 50% down. And that is what happens to people, in pretty much every bear market. They try to pick the bottom for altcoins. They try to catch the knife, but it keeps on dropping. So it's better to wait for the market to be in a position of strength. When the uptrend is more or less more certain to pick up altcoins, you can take a gamble, but it is just a gamble. It's not something I personally do. Up to you, however you want to play it. But that is what I'm watching out for. Thank you guys for tuning in. Have a great day. We'll catch you in Thursday. I'm not here tomorrow. Got a doctor's appointment, but I'll see you on Thursday. See you then.